Hi, this is Raghee and I wanted to walk you through a potential bearish setup for those of you that are still Euro US dollar bears. The chart you see in front of you right now is a 4-hour chart, a 240-minute chart, and you can see that the angle of the 34 EMA wave as well as the grab candles, and if I can squeeze back into, let's see, this is a look back to August 9. So we've got August, September, and about halfway through October. We're well within our required minimum 4-week look back, and I like to work within about a 4 to 6 week look back. But here I've got about 4 weeks, and if I want to slide it one more time, you notice it gives us a lot more. So obviously the horizontal axis sliding on any charting platform is not going to be exactly what we want for look back, but slide into maybe a little bit of the minimum look and then maybe a little bit of the maximum plus look. But you can see here easily we're looking at a 12 to 2 o'clock angle. Now what's interesting about what's been happening in the Euro US dollar is essentially the fact that when you take a peek at what's happening on the daily time frame, you'll see that we had a really nice downtrend, and here's a just shy of a 1-year look back, really nice 4 to 6 o'clock downtrend, solid red grab candles that indicates that bearish sentiment, bearish momentum, which all culminated into this downtrend, as well as the fact that we had continued to correct and then got rejected, corrected, rejected, so there was selling pressure coming down. Now there are, of course, a few other moving averages on this chart. Let me tell you what they are. We've got the 200 period simple moving average here in black. We've got the 20 period simple moving average here in silver. And this is actually an 89 period exponential moving average in this orange color. So the 20 and the 200 I think are very helpful in terms of their importance as psychologically relevant moving average settings. The 89 period is oftentimes, number one, it's a Fibonacci-based moving average, but it's oftentimes a pretty interesting moving average to watch. You don't need to keep it on there. It's just something that I like to watch, but again, it's not really necessary. I think the 20 and the 200 are very necessary. So what's happened? We went neutral on the grab candles. We lost the 4 to 6 o'clock downward angle of that 34 EMA wave. We went green on the grab candles, indicating that near-term shift into bullish sentiment, bullish momentum, and the transition completed out of that 4 to 6 into a more sideways market trend. But look, even though the daily directional bias is no longer bearish, and yes, we can argue that it's more bullish than it was bearish, I think whenever we look at the surrounding fundamentals, we're definitely looking at an overall market that fundamentally still has a lot of drag on it. The Euro US dollar right now, we are in historic times. This isn't an exception that I make just off the cuff. This is an exception in terms of the shift out of the downtrend that I make within the understanding that in terms of this Eurozone problem that has been continuing here, the optimism play, the hope play that a lot of people are watching, I think is going to exhaust. That's just my own feeling. Now, that doesn't mean I'm going to get bearish just because I have a bearish outlook. In fact, no, I have to have a setup. So intraday, absolutely, intraday, if you're going to look at opportunities to get long, you can look at the 5, 15, and 30. The reason I focus on those short-term time frames is because those won't require longer-term organization of bullish momentum and sentiment. Again, my overall feeling is that at some point this is very much going to exhaust. So here's the setup, and here's what I'm watching. Notice I've got a 20-period CCI on this chart, and this is a classic wave reversal setup. Here's how it works. You have to be in a situation where the reversal down through the opposite side of the wave is one that is coming after a fairly healthy trend, one that's been on par with past trends. In other words, I don't want to have just a small bounce and I'm looking at reversing. I want to find a trend that has been underway for some time, like this one has been, and has the capacity to really catch and capture attention in a significant way if the movement continues lower. And I think that movement continuing lower would be accelerated by a break of 3,700 and most certainly the acceleration through 3,650. The trigger here is going to be the 34 EMA low. Okay, now of course this is a dynamic level, but if and when prices are able to break down through the 34 period EMA low, and that EMA low break is accompanied by at least a negative 100 or greater, so negative 100, negative 101, negative 102, or greater CCI, I've got what's known as a wave CCI or wave reversal. The stop is pretty easy. It's the opposite side of the wave. So those of you that are already familiar with my swing trading might say, well, Rag, isn't this a swing trade? Yes, it is. Again, I don't mind getting long the euro US dollar, but it's not a time frame that I would want to be trend following in terms of my overall bearish outlook with this pressure of the fundamentals. Again, I don't take this overarching fundamental story that's been weighing over this pair lightly. These are historic times. This is not something that I'm just going to impose on any pair at any time. Again, these are historic times. But if you are a bull, focus on the short-term time frames. I just am not a big fan of getting into a swing here. Now, I could be proven wrong. This market could blast up to 3,800, 3,850 in a heartbeat. I acknowledge that. But if I want to be long, I'll find another time frame to do it on. I just feel that being long the euro US dollar is just a very, very risky proposition on a longer term time frame where I would need longer term organization of bullish sentiment and momentum. So again, this is for bears only, and what we're looking at here is a breakdown through the 34 period EMA, which would also coincidentally be a failed swing buy in this scenario as well. Wave reversal or wave CCI entries, they're one and the same, often come on the heels of a failed swing trade. So again, when the swing trade fails is where I'm looking for the momentum to accelerate and carry this pair lower. So while the 34 period EMA low is my short trigger, the 34 period EMA high plus about 3 to 5 pips is my stop loss. And that is the setup for a short trigger on the 4-hour chart of the euro US dollar, again, for bears only.